Free and clear of the chatter from Wall Street, you're listening to Talking Stocks Over a Beer, hosted by hedge fund veteran and newsletter writer Mike Alkin, who helps ordinary investors level the playing field against the pros by bringing you market insights and interviews with corporate executives and institutional investors. Mike sifts through all the noise of mainstream financial media and Wall Street to help you focus on what really matters in the markets. And now, here is your host, Mike Alkin.
It's Tuesday, April 16th, 2019. Hope you're doing well. It's day after tax day in the U.S. Got that out of the way. Always feels good. It's always a pain in the ass putting together the packet. My accountant sends me 3 months, 4 months prior, all the prep stuff you have to do. And of course, I procrastinate and always wait. It's such a pain in the ass. But get it done. And here we go, on to a new tax year. So I know people are expecting, at least those of you who don't fast forward through the first 10 or 15 minutes of the podcast, which I expect many of you do because you don't really particularly care to hear about the personal stories or the sporting commentary. And as you know, we are in the thick of the NHL playoffs. And my wife said to me last night, yeah. I walked into the kitchen in between periods of one of the games, and I said, it's unbelievable. The level of play in the playoffs is just absolutely crazy. It just doesn't get better than this. And she looked at me and she said, you are such a broken record. You have anything else to say during the NHL playoffs? I said, no. She said, okay, good. Enjoy. It is the first round, and you just have 16 teams fighting it out, right, to advance. And the level of play is just, it's stupendous. The level of intensity that comes is just really, it's fantastic to watch. The action, the short shifts, the 45-second shifts, and the new guys are on, so they're constantly bringing energy, and the crowd's going crazy. And it's some really interesting surprises, right? I mean, it's Tampa Bay down 3-0. I mean, who'd have expected that Columbus was going to be up 3-0 on Tampa Bay? Tampa Bay had dominated the NHL. They won the President's Cup. They ran away with it. And they look like a team that's not played before, like they're just meeting for the first time in training camp. So it's like they literally forgot how to play. So it's crazy. And then you have the Capital Hurricane series, right? Caps went up 2-0, and in Carolina last night, the crowd was out of their minds. It was fantastic watching. Hurricanes won 5-0. We've had a really good Nashville-Dallas series. The Avalanche are surprising the Flames. They're up 2-1 on them. They dominated Calgary last night. So it's just been one after the other. It's just great hockey. Forgot my Islanders up 3-0 on the Penguins. I wasn't going to mention it because I can't, because they could easily lose 4 straight to Sid Crosby's Pittsburgh Penguins, and I'm afraid that I'm going to jinx it. So no gloating, because there's nothing to gloat about until you've won your 4th game, because you're playing a great team. They've got a home game tonight in Pittsburgh, down 3-0. I can't believe that they'll come out anything but just absolutely flying. And the Islanders playing well, and I'm just holding my breath, and we'll see where it goes. But so playoff hockey is here. Pretty exciting stuff. And again, if you don't watch it, I apologize. I'm sorry to hear that. I would also, yesterday there was I was reading about on Twitter, a lot of people anxious about Section 232 and uranium. On Sunday, the Department of Commerce sent their recommendations under Section 232 on their investigation regarding their recommendations to the White House, to President Trump, on the petitions filed by UR Energy and Energy Fuels on the ground of national security. Those two U.S. uranium miners are asking for a quota be imposed on U.S. utilities to buy 25% of their uranium from the U.S. miners because the U.S. miners' production has imploded. They feel as though the Kazakhs, Russians, and Uzbeks are sending in cheap uranium. And that's been since July of 18. That has been in the hands of the Commerce. They had 270 days to investigate, which they did, and they sent their findings to the White House. And some people were hoping that you might actually know what those findings were, and that is not the process. Once sent to the White House, they have 90 days to make a decision on what they're going to do. And they could take the Department of Commerce's recommendations at full face and implement those, or they can take none of them, or they can take some of them. They can do whatever the heck they want. It's in the White House's hands as to whether or not they want to reveal before a decision is made what those recommendations are. But fret not I, because we are a couple of things. One, we know it's within 90 days, and it's already been since January of 2018 when these two U.S. miners filed the petition. It was July when the Department of Commerce decided to pick it up. So what's another 90 days if it went that far, which I don't suspect it will. But I have no basis for that. But I don't believe that the president will take that long to figure it out. There have been massive lobbying efforts on both parts. Obviously, the U.S. utilities have a much bigger lobby than the U.S. uranium miners. But the U.S. miners have some pretty good arguments. So we will just see how it plays out. But you're closer to an answer than not, I suspect, because it's uranium, and uranium is it's a sexy topic, right? I mean, think of Uranium One and all the press that came about, and even Trump himself would talk a lot about that. But I suspect the press will dig in and try and come up with what they can on it, and you would probably see, I would not be surprised to see what some of those recommendations have been or are, start to come out over a period of time. I'm indifferent. For me, 232 has created a pause in buying of uranium at the utility levels in a significant way, in a major contracting way, and I think it's created uncertainty, and markets don't like uncertainty. Any market doesn't like uncertainty. They want to, good, better, and different. Just let us know what it is, and then we could plan accordingly. That's how markets like certainty. And as you get closer to a decision, as we get a decision, that will lift the veil of uncertainty, and then the market could move forward. And I think that's healthy for price discovery. And price discovery is what's been lacking in a significant way in the long-term market, in any meaningful contracting way, in terms of since we've had major production cuts. I mean, you've had some contracting take place, but I'm talking about size contracts and lots of them. So I think that's going to be a eye-opener for those who are involved in the industry that have been really had it good for quite a number of years, and they've done very well. The utilities have done a wonderful job of staying out of the market because they haven't had to be. There was post-Fukushima in 2011, there was a heck of a lot of uranium in the ground, and the U.S. uranium miners, I shouldn't say U.S., the global uranium miners were still producing and spending on capital in 2011 and 2012 and still advancing projects, because they figured that when 54 reactors in Japan went offline, 13% of global nuclear power demand went offline in Japan after Fukushima after the accident there, that they would have to come back online because it was almost 30% of Japan's electric grid. But they were resourceful, the Japanese, and they brought in liquefied natural gas, and they were able to substitute. And it's just now that you're really starting to see any type of uptick to those with 9 reactors online and many more slated to come online over the next few years. But the uranium industry anticipated that happening many, many years ago, and it didn't. The uranium industry was looking forward to the ending of the megatons to megawatts program, which was sending in upwards of 20 million pounds a year into the secondary market. And all that was from 93 to 2013, you saw the Russians and the agreement where the Russians were downblending intercontinental nuclear weapons from highly enriched uranium down to low enriched uranium, and that was coming in to the market, and so that ended in 13, and the miners were anticipating that, oh, geez, look at that, the Japanese will come back online, this program will end. But the Japanese didn't come online in any way, shape, or form that people anticipated. And then the Department of Energy in the U.S. Didn't quite fully replace what the megatons to megawatts program was providing, but they were selling upwards of 6-7 million pounds a year, and things just got delayed. And it wasn't until really small cuts in 16, but then 2017, 2018, you've seen significant supply come offline. But during this time, you haven't seen since these big 25% of global supply has come offline in production cuts and the secondary sources of supply, you're seeing a reduction in the amount of underfeeding, which is a secondary source that happens at the enrichment plant. That was a huge amount of supply that came into the market, upwards of 20 to 25 million pounds a year that the market didn't really anticipate. And I won't get into the physics of underfeeding, but essentially when there's excess capacity in the enrichment process, they can extract some extra uranium, and it winds up as enriched uranium product as an end market competing with mine supply. So for a host of issues that you saw a significant amount of excess supply. Well, now since 232 petition was filed in January of 18, it's really created somewhat of a big major pause in major contracting that's going to need to occur because you're seeing a contract expiration waterfall from at the utilities, and typically these contracts are 7, 8, 9, 10 years, and if you look back at history, the prices and the long-term contracts and at the big prices are typically signed at peaks, and they're not signed at bottoms, right? Kind of counterintuitive. But you see big contracting when prices are high, and that's because the utilities are concerned about the security of their supply more so than the price they pay for the uranium. And they've been very smart, the utilities. They've stayed out of the market. You've had the global financial crisis, which created low interest rates. It created a market for some of the investment banks to step in after Fukushima melted down for the investment banks to come in and create what's called a carry trade, where they would go and tell the utility, no need to go out and sign a 7 to 10 year contract. You don't know where the price of uranium is going to settle in. So why don't you just buy a short-term deal with us and we'll carry it for you on our books. Let's enter into a 2-year agreement, 3-year agreement. We'll enter into it, a contract with you. We'll carry the uranium. So they go out into the market and buy it and then figure out where you are in a couple of years. That was a gold mine for the utilities. It was they were like kids in a candy store because they didn't need to go out and secure these long-term deals, and it worked out well for them. Too much supply, the miners were slow in reacting to take production offline, and you had a significant supply-demand imbalance with much more supply than needed for many years. But like things happen, right? When you get to a price where where the cost to extract it far exceeds the cost you could sell it for, you need to have production cuts. That's not rocket science. That's basic, right? Economics 101. And you've seen that happen now. But when 232 came, that created a lot of uncertainty. So real price discovery in the big portion of the market where you're going to see all this contract is occurring, hasn't been able to occur, but it's occurring when it should be occurring. It's at a time where the contracts, major contracts, are starting to expire, and you're seeing the utilities' needs be uncovered, meaning how much are they going to have that's not under contract? And that's starting to accelerate in 2020 through 2023 through 2025. And the reason that's important is it's a couple-year fuel cycle. And you can't just order up uranium. Hey, I need it tomorrow, send it to me. No, it goes through a fuel cycle, which is 18 to 24 months. So the timing of price discovery is occurring as you're starting to see the waterfall of contracts expire. And that will be accelerating over the next few years. And I think that's what the market needs to heal. As for 232 itself, my view is there is a significant deficit of uranium. My team's view, our in-house view, is that there's a significant deficit that will be here for many years. Many of these projects that are needed to drive the supply for the demand that's coming from the developing world is going to require new projects, not just existing projects. And some of these existing projects wind down over the next few years. So you need new supply, and that new supply can't come online. None of these projects could get financed unless you get $50. There's one out there, two out there. You'll see that they show they can do it at lower. There's a small, but not to make a dent. So you need the price to go higher during a period where contracts are starting to become uncovered. And now as 232 lifts, we get some certainty as to what it is. You start to get price discovery again, and that's what heals markets. And that's where, our house view here is that you see a significant change in buyer psychology over a period of time. And so anyway, 232 or not, there's going to, with the deficits we see, if you're a U.S. miner or not, you're still going to be okay. If you are capable, if you have real projects, if you can go into production, you will be fine wherever. So anyway, that's our view. I was seeing a lot of traffic yesterday. Do you care? I'm so anxious. I don't. Well, who cares? It's another couple of months or not even. You've been waiting this long. You're in this trade. If you're in the uranium trade to make hopefully many multiples of your money, and the asymmetry is there, who cares? You've already waited a year and a half, 2 years, building positions. What's the difference? Another couple of months or a month or 3 months, doesn't matter. So anyway, that's my view there. A bridge version, of course. There's enough stuff out there if you want to YouTube what my overall more detailed view is. But so obviously, right, uranium is contrarian. And it's just kind of how I like to think about investing. What's the point? And for me, my view, I'm not saying it should be your view, is if I'm going to put money to work, I may as well put it in things where there's a handful of things that there's some asymmetrical risk reward. Because I'm terrible at trying to figure out which way the market's going, I have a risk on, risk off view, right? Is a market risk on or is it risk off? What would make it be switch? But in terms of putting money to work, managing a diversified portfolio, you're basically going to do what the index does. You're not going to generate alpha, which is a performance above the index. It's hard. So I look for those things where people hate, and then dive deep and say, is there anything interesting? And anything asymmetrical, anything changing underneath the surface, anything that people are really relying on a recency bias because that's what's been going on. So that's what's going to continue. And sometimes when that happens, lethargy sets in, apathy, and you can find some interesting opportunities. That's how I found uranium a few years ago. So one of the guys that I talked to that I think is really smart at that is on the other side of the world. And he has a 3, 4, or 5 year time horizon. And that's how my view. These things, if it was obvious, it would happen right away. You wouldn't have the opportunity. So when you look at things, over a 3, 4, 5 year period, that's when the real healing can take place. If it's already started and people aren't paying attention, right? You got to just keep doing your research and digging deep and finding out what's going on and finding out what metrics in any industry matter. But that's when you start to think about it. I started talking publicly about uranium in, I think it was May of 17. So here we are 2 years now. So we're getting into our period. And in the interim, the price of commodities gone up. The stock's gone up and down a little bit, but I'll take up or down a little bit when I think if my work is right, what the upside is. It's who cares if you're sitting on money that's not going anywhere for a little while, or you could put it to work trying to slug it out with figuring out whether or not XYZ company's going to do anything. That's part of an index that's going to just move around, and you're going to be like the tail of the dog. My view, not saying it's right, it's just my view. But somebody who has a similar view and has a contrarian bent to him and incorporates a lot of geopolitical thinking into it is somebody that I think is worth listening to. And he's our guest right now. And his name is Chris MacIntosh. And Chris runs Capitalist Exploits, which capitalistexploits.com or .at. Lives down under, former venture capitalist, now manages his own money, has a couple of really good newsletters on deep value. He has a resource newsletter called Resource Insider, run by a really sharp guy who I know very well, is Jamie Keach, who's a mining engineer and sniffs out the BS that happens in the mining space, and really just sharp guys. But Chris is going to come on, and we're going to talk about some geopolitics and some contrarian thinking.
Chris MacIntosh, thanks for joining, buddy.
Thanks for having me, Mike.
Remind people where you're calling from.
I'm calling from Hobbitville, which is at the bottom end of the earth, and a little known place that I hope kind of stays little known, New Zealand.
This is a little bit of slice of heaven.
A little bit of nice slice of heaven. Yeah, exactly. So that's where I'm calling from. You're from the Big Smoke, and so time zones are a little bit patchy at times, but nevertheless, we managed to connect.
Yeah, we did. Absolutely.
So what's on your mind, Mike? What are we going to talk about today?
Well, so for those listeners who are not familiar with Chris he's a great background. He former venture capitalist, now runs his own fund, his own money, and has a great newsletter called Capitalist Exploits. And Chris is a guy after my own investing heart, because he takes a time horizon of 3 to 5 years. He could give two rat's asses, excuse my French, about what the market thinks. He looks for deep value. He looks only for asymmetry. Otherwise, he doesn't put his money to work. And we're going to talk about that. And he's got a great skeptical eye. And so while he doesn't short sell, because he likes to keep his sanity, he does bring the eye of a skeptic and looks at things both through the long and short lens, but expresses the view in very long time horizon in deeply out of favor companies and industries. So, Chris, how do you see the world right now?
Well, I guess we can come back to the one pounding thing that's in my head, which is the cash incinerating vanity machine project called Tesla. And we'll deal with it maybe at the end. But
it's hard. By the way, I saw on Twitter somebody said this, and I agree. Somebody wrote, I can't remember what I forgot about Tesla. Like, it's so, every day it's so much. You have to sit down and say, my God, I forgot so much, but I knew it, right? It's just crazy.
The funny, well, like I said, we'll come back to it, but suffice to say that I'm really going to miss it. It's the most entertaining equity I've ever watched in my career, bar none.
Me too, bar none.
And for that alone, I'm really going to miss it.
Well, for me, and we'll touch on this. For me, Chris, it literally is not only the digging into the financials and understanding the fundamentals, right? That's a whole separate kettle of fish. It's, for me, my jaw drops when I see this carnival barker of a CEO tell the world something, and to watch the reaction of those who follow him blindly. And for me, I kind of understand how cults form and understand how people literally are walked off a cliff. So anyway, we'll touch on it later. So
it's an absolutely fascinating insight, real-time insight into human psychology.
It is.
Actually, I find it very, very interesting from that perspective.
Yep.
But back to your question. Look, I mean, you're an American. You're sitting in New York there, and you've got a ground eye view to what's taking place there, and it's been on my mind for some time. As you know, I spend a fair amount of time looking at geopolitics, trying to identify large sort of trends in motion. And I look at that, and then I look at deep value sectors, and typically where the two sort of collide is where I get more comfortable in taking a position, because you can have deep value sectors, or deep, something that looks to be on a relative basis very cheap, but it can stay cheap for some time, and which I'm relatively comfortable with given my time horizons. But I do feel like I kind of need to understand whether something is going to get drastically more cheap for some exogenous sort of reason. Not. And so I kind of look at a lot of that, and it's been really fascinating of I'd say the last 10 years, watching what's been taking place on a political basis in the US. And I wrote a couple of articles about this the other day with NATO and, the US kind of scaling back, so to speak, in NATO. And some irate subscriber, just a free blog, wrote in saying, "Oh, you're an idiot. Haven't you just seen that they've actually sent some more, I think it was fighter jets or something or another to Europe?" And what you got to understand is that they're not pulling out; they're scaling back, and what they're asking European countries to do is to pick up more of the that hammer to wield it. And part of that is that the reasoning for NATO doesn't exist to the extent that it did post World War II. Russia's not the big scary monster that it used to be. It's more a regional power than a global power, which it was in the sort of Cold War era. And they're focusing much more intently on China. And you can see this in the current administration. And so that whole interplay is quite interesting. While that's taking place, it's been fascinating to look at US domestic politics and how that's influencing foreign policy. So if you go back to between, I guess, the 1950s and probably the 2015, US domestic politics was basically bipartisan. It's like neither side liked the other much, but both pretty much agreed on foreign policy and the global world order that America had built. And I'd say that that's now changed. It's like you've got the most partisan that domestic US politics has ever been. And ever, like that I've ever seen. And you're seeing that coming through. Actually, there's just as a side point, for any listeners that have not read The Fourth Turning, it kind of goes into, I don't agree 100% with all of it, but the concepts of The Fourth Turning are certainly true. And you look at what the authors of that book talk about is these demographic groups. You have, roughly 20-year generational cycle, and how those generations affect politics. And they go back into a lot of history showing how that happens. Mostly it's very US centric, and that's kind of, I guess, part of the stuff where I don't necessarily agree with everything, because it's kind of a very US centric view. Which it probably gets away with in the most part, because the world has been dominated by the US, certainly since the 50s. So, but if you go back, like what kind of held domestic policy together, US domestic politics together, where it wasn't so partisan, was in large part was the Cold War. You had the commies led by the Ruskies, and they were bad. Everyone knew that. And then any country supporting them was sidelined or overthrown if possible, if you think Latin America. And that was kind of that. And so anybody that would have rebelled against that would have just been shot down. It's like, are you mad? These people have got fucking nukes and they're going to kill us. And we have to do everything that we can to stop them. Everybody remembers, well, many people remember the Cuban Missile Crisis and so on and so forth. And so there was kind of like this imminent sort of potential threat, right? And that was quite unifying. And that doesn't really exist today to the same extent. There's no Cold War now, even though I'd say fair to say that the left in the US is trying their hardest to drum up anti-Russian hysteria, but so far that just seems to be backfiring spectacularly. And when you have things like the Mueller report that came out, and then you had Cambridge Analytica, for example, you kind of all these. It's not a unifying thing, I guess, is what I'm saying. You've now got people who are either for it, going, oh yes, Ivan the Terrible has been affecting our elections, and all this kind of nonsense. And even you're seeing it now with the arrest of Assange. Oh, he's a Russian spy, and he was part of it, and that's the missing link. And anyway, the point is that it's very much now you got those who believe it and those who don't, and then there's like a whole swathe in the middle who are sort of teetering. They're going, oh, we kind of thought maybe it's true, and now we're looking, it's not so, we're not so sure. But generally, foreign policy is now like pretty much in a state of flux. There's a good friend of mine who runs a geopolitical risk firm over in Asia, and he tells me it's in a state of collapse. He's an American, and I'm not so sure, but what I am sure of is that, because it's pretty much self-evident, is that the cohesion that existed previously in terms of US domestic politics is now gone. It's like there's just no unifying threat to US interests. And also, like, most Americans have never left the country and don't even have a passport. So they kind of still think of China, for example, as just some backward place that's massively inferior to the US. And so even if the current administration is saying, hey, these guys are a threat, and we need to sort of counter that, it doesn't have a unifying it's not unifying the whole country where everyone believes that. Some people believe it, some don't. Right. Again, partisan. Yep. And then if you look at kind of what hits the news wise, and I was pulling up because I was trying to do some trying to get some stats on this now. I'm still not sure where to look at it, but I was just kind of doing random searches going back for various tranches, like 10-year periods, and looking at what were the major headlines in Western societies, and then in the US in particular. And like, there's just in the last, probably really in the last 3 years, but it probably happened a little bit before that, there's like now the issues in the US that are dominating the debate are not at all international. They're not. Foreign policy doesn't affect it at all. It's like, at the moment, on the radical end, you've got the debate is about social issues, and far left, it's like safe spaces, gender equality, recognition of folks who want to ignore their biology or whatever. But basically, you've got people interested in social programs, welfare, and taxes. And then I guess the less aggressive amongst them are just like interested in taxes and pensions and things of that nature. But none of them care about foreign policy. It's like it's a non-issue. And this is really, really different. And I can't, like, you go back even 10 years prior, 20 years prior, it was massively different. And I can't really see much of this changing, since it's in no small part due to the demographics. And again, that's one of the things that they talk about in the fourth turning. And so you've got like this new demographic crowd coming through, and they're increasingly in positions of power. I mean, Cortez is just sort of one of them that is a fairly she's out of her mind. Being an example. Yes, she is.
I think, and we're talking about Representative Alexandria OcasioCortez, who won a congressional seat representing area of the Bronx in New York, who was 29 years old, and she's a great story. She's a college graduate, but she was a bartender, comes from an area, although she didn't grow up there, she's from there, but an area that has its struggles, and now she represents them, and she unseated a longtime veteran congressman, and great story. But she's a hard socialist, and she is, unfortunately, she's bereft of facts. And when it appears that she doesn't have her talking points, Chris, she has no idea what she's talking about. So on cue, on talking points, she's okay. But when you get her in an interview, it's just mind-numbing. But she has 4 million Twitter followers.
Like, as mind-numbingly stupid as some of the things that she comes out with, and they really, I mean, this is comedy 101. It's really quite entertaining.
It's crazy.
The fact that the electorate actually get to see that and don't find that either overwhelmingly funny and absurd at the same time, points to that very thing that I'm talking about. It's you've got entire generations now who kind of look at the stuff and go, oh, okay, well, that's probably how I think. And you and I look at it and go, that's absurd. That's ridiculous. It's nonsense. But that's not how, everybody, if you look, Mike, the things that people are obsessing about at the moment are things like this silly actor who staged a hate crime and got off scot-free. Or it's how a Supreme Court justice may or may not have acted when he was a fucking teenager in high school. I mean, this is rubbish. This is nonsense. So while that's taking place, nobody's even thinking about what happens in foreign countries and how foreign policy should or shouldn't look, right? It's too hard for it. It's like, that's too complex. We want to talk about that. Like, we want to worry about whether someone, did something naughty when he was a teenager and, I don't know, smoked pot or, got jiggity with some girl he shouldn't have. Or, I mean, it's Kardashian stuff, right? But that's what's dominating the debate. And so we can kind of laugh at it and all that. But what's interesting, and what I've been thinking about, like I've got this big map on my wall in my office here that I'm staring at the moment, and all kind of various things that I'll look at. And one of the main things that was interesting post World War II, and of course the Brits held it before that, was the shipping lanes of the world. And you can point and bitch and moan about everything that you like with respect to the British Empire, but what the British Empire did, they did many terrible things and many good things, just pretty much like any other ruling power. One of the good things that they brought, apart from a legal system to many parts of the world that is probably the best that we've come across, was that they controlled and opened up the shipping lanes. And they protected them for trade. Now, they did that for their own reasons. Like, I mean, it wasn't like they were just being nice to everybody. That's not at all. They took their slice, as have done Americans. But we've had this period post World War II where essentially American Navy has provided the safety of those shipping lanes, and they've, again, I'm not naive to how this happens, and that they have not extracted their bounty with favorable trade deals, ensuring US companies are the ones that sell military hardware to allies, or that US companies get to extract the resources and so forth. I'm not naive to any of that. I'm just pointing out that this is the way that the world's worked, and that it's increasingly changing, and that the political will to maintain that status quo is lacking from within the US. Again, part of this domestic politics which is talking about, which is very partisan, and it's definitely lacking in the next generation coming through. Like the Cortezes of this world, they have no fucking idea of how trade takes place and what it takes to maintain the stability of it.
So just for context, Chris, Amazon wanted to come to Long Island City for headquarters too. Long Island City is right outside of Manhattan, right on the other side of the East River. And it was going to bring $28 billion over a number of years in revenue to the city. And Long Island City's been being built up with some nice housing. And for years and years and years, it was a little bit run down, but now it's starting to really turn. And part of New York State and New York City getting them here was $3 billion in tax breaks. Well, OcasioCortez and her socialist agenda went berserk and put so much pressure on it. And her argument was, how dare you give $3 billion to this big company? Now, they were bringing thousands of $150,000+ jobs to the area.
But hang on, not giving them $3 billion. They're giving them $3 billion in tax breaks.
You're giving it in tax breaks, but she didn't know that. She literally said, we should take that $3 billion and put it towards infrastructure. That's what we need. Said we're making them people rich. And people came out and said, you're joking, right? Like, do you understand? We're not writing them a check. That's a tax break.
Money that's not yet earned.
Right. It's money that's not yet earned. And plus, it's a reduction in, but they're still going to be generating massive amounts for the economy. She didn't understand it. And Amazon said, go scratch yourself. We're moving somewhere else. But that's your sense that you talk about trade. That's what you're dealing with.
Yeah, just a complete lack of understanding. I mean, if she can't understand that, which is really like basic 101, I think my my 13-year-old son can figure that one out. And I'm confident he could. There's no ways that you're going to have any decent level of understanding of how international trade takes place and what it requires to maintain that trade, and why. I mean, on the face of it, it's difficult to bring this to the public eye. Like you've got, for example, and I'm not making any. I'm not saying this is right. I'm just saying this is the way that the world works. Part of the reason that the US has always been friendly to the Saudis is not because they necessarily agree with the fact that chop off people's fucking heads and that they treat their women like shit. It's because the greater enemy to them is Iran, and they need to have a regional allies within Middle East to be able to counter that threat. And the same is true, around the world.
What's that? The enemy of my enemy is my friend, right? Or keep
exactly. Precisely. And so, that's kind of always been the way that the world's worked. It's why they still provide military hardware and some to Egypt. And many of these other countries, which you might look and go, what the hell is that all about? And again, I'm not saying that one is right or wrong. It's very difficult to actually, on a moral grounds, you kind of just say, well, none of this is good. If you kind of think about like what's going on in Syria, right? I mean, the US were backing ISIS. I mean, that's been evidenced. And the reason that they were originally backing ISIS was because they were trying to overthrow Assad. And so you could say, well, he's a bad guy. Like, sure, he's a complete moron, and he's lorded it over many of the other tribes within that region. And he's not a good guy, if you want to point it like that. But but then they're backing Assad, which is even worse. And so it's these are difficult things on an international playing field. But when you when it just comes down to trade, for example, you've got to have trade routes open so that you can move your goods to market. It's that simple. So like there's a couple of areas within the world that are critical for that. Panama Canal, super important, right? It's why the US have been in there and exerted their influence. It's also why they're pissed off with the Chinese, who want to go and build a new canal that they're building, which would change their whole power dynamic. And then of course there's like the Strait of Malacca, which is super important for the Chinese, which means that which is why they've put a lot of effort into relations with Indonesia and Malaysia and Singapore. It's also why the US are very, very heavily influential to those countries, because at the moment they have them still in their sphere of influence, right? Anyway, so like all of this kind of stuff going on, and then you look at the current clutch of politicians and demographic groups coming through, and you realize, I mean, again, we're kind of pointing to Cortez, going, oh well, no, she's just a manifestation of some of that, and those people don't have the intellectual capacity to understand half of this stuff in the first instance, and even if they did, whether they have the political or sort of will to keep that status quo is highly questionable. I'd say it's probably not going to happen. And we're kind of already seeing a lot of this, Mike. If you think about what's happened just in the last 2 years, Americans have basically abandoned some of their alliances, many, and other geopolitical agreements have taken hits. NAFTA, NATO, World Trade Organization, deals with Cuba and Iran off the table, and Turkey, both the Koreas, you know, and that's just in the last 2 years. These are fairly major things. If you look at what's taken place over the last 10 years, like what's happened in the last few years has been an order of magnitude much higher. And
very much. Very protectionist. Very protectionism.
Yep.
Protectionism.
And then like while all that's taking place, you've had China just quietly going about making their inroads just on investment basis. Like they pretty much are the major player in Africa now. They've recently become Brazil's largest trading partner. They're the largest investor in places like Pakistan, Greece, and now Italy. And this isn't a coincidence, right? So like Italy and Greece, you got Italy with what, debt to GDP, I think it's 120%, something like that. Greece is 189. They're the worst within the EU. So like they basically need help, right? They're also coastal cities, coastal countries, which give Chinese access into the EU. And the other thing that you realize is like the Chinese refuse to deal directly with the EU, but they rather choose to deal individually with member nations, which the EU is pissed off about and they don't like at all. But if you go back, that's just a divide and conquer. I mean, it's and you've already got these fractioning within the EU. And with that investment and trade will come politics of power. You know, it's interesting. I wrote an article the other day and someone wrote and they said, oh, you don't understand. Chinese are not expansionist. And I'm like, fuck off. Everybody's expansionist. Like you know, it's it's human nature. It's like, you know, if you're a fighter and you're trying to make it into the top 10, let's say you're I don't know, like MMA or something like that, and you make it into the top 10, and you're like, wow, I made it in the top 10. Like your aspirations change. You know, you're like, shit, I didn't think I could get into the top 10. And then you start thinking, could I get into the top 5? Could I be the best? It's like, are you expansionist? You might not have originally been, but you become expansionist when you see that the opportunity is available. That's human nature. So the idea that China is different in that respect to every other human group on the planet is to me just silly. So you're going to see, like in the next few years, I think you'll see that there'll be pressure on some of these countries to side with China on various issues, and it could be them, you know, when they sit at the UN to discuss their claim on Taiwan, things like that, and you'll suddenly have a couple of these countries going, oh, like maybe it's Italy, maybe it's Greece, maybe it's both, maybe it's Brazil, you know, where they go, yep, we're okay with that, and the world will be shocked, and you know, watch for it. I think it's coming. And what's interesting, again, you go say, okay, well, that's all well and good, but what does that mean from an investment standpoint? I think all of this very much comes back to there's increasing protectionism. There's a change up taking place, and it might last for the next 20 years of a global reordering. And that's likely to be volatile. And I think that the biggest beneficiary out of this is likely to be energy, because with a threat to trade, for example, routes being negotiated, if you sort of think South China Seas, like that's, I know that most Americans kind of don't watch this stuff, but that's a huge fucking issue. And it's a big issue in Asia. If you read any Asian publications and you speak with anyone there, it's a big, big issue. This is major, and people are not paying a whole lot of attention to it. But in any event, like the critical importance of energy that looms larger than any other. I mean, like you can do without imported bananas or French wine or a pair of socks made in Vietnam, but you're completely screwed without energy. So, you know, that I think, and then you look at each of these countries' energy makeups, and China in particular are not energy independent. And you know, speaking of that, I don't know if you saw the two things that happened: the Nuclear Energy Leadership Act. Yeah, must be Act. NELA is their acronym. That was just reintroduced into the U.S. Senate.
Yes, it was. Yep.
Old Billy Gates is championing it all.
Yep.
He's always been a proponent of that.
Right. And it's fascinating because nuclear energy leadership, and you think about it, the U.S. has completely lost its leadership role in nuclear energy, right? They have lost their in technology, in building.
Yeah.
They hardly mine it. They only have one conversion facility. They have no owned enrichment. Yet the thing is, in the past, if you wanted to be in nuclear power and you wanted to get onto the electric grid with nuclear power, you needed the U.S. to sign off on it. And why was that meaningful? Because it prevented proliferation. Because the people, if they had to come to you, you could control whether or not they got it. Now they're like, okay, we'll go to the South Koreans, the Russians, and the Chinese. Go scratch yourself. And so they've let their role in leadership just implode. And so now they're, you know, sometimes you hear too little, too late. You know, all of a sudden somebody woke up and decided they needed to do this, when the reality is the Russians and the Chinese have been vertically integrating the whole nuclear industry, the whole fuel cycle, for quite some time now. And they just seem to get it so much more in terms of thinking ahead and thinking strategically in energy.
Because they've also needed to, right? I mean, maybe not
out of necessity, right?
Yeah,
for necessity breeds invention.
Yeah. And on that point, the Chinese have just approved the investment of a whopping $12 billion in the construction of new nuclear power facilities.
Yep.
Now, if you come back to what we discussed before, it's like geopolitics of China. Remember, these poor sods, they don't have any energy, really. I mean, they burn shitty coal.
Yep.
And that's, again, where those shipping lanes and access to markets is really pretty important for them. It's critical, really. So they're going to continue, I think, on multiple fronts to address that problem. Domestically, they're going to use nukes, but they're also going to be asserting more control in the South China Seas and working to secure deals with countries like in the Strait of Malacca, Malaysia, Singapore, Indonesia, like I talked about. And it's also why they're investing heavily in Pakistan, trying to build themselves a land route through to get to the Arabian Sea. But if you go back to that investment that they've just put forward, I was doing the numbers out. They're going to build 6 to 8 per year to get to 2030 and their current target. If you put numbers into perspective, there's going to be 66, I think it is, new reactors built. And they've already got, I believe it's 45. You can correct me on that. They're already in
that's
operation.
Right. Yep.
And the extra demand for that is going to be around 70 million pounds of yellow cake per year. From when you look at the previous stuff, again, you're the expert in this stuff, but they normally hold inventory for about 6 to 7 years. And of course, they don't produce any of their own uranium, so they're going to be buying it.
Because they have very little indigenous uranium, they will never put themselves in a position to hold what a Western utility will be, which is 2 to 3 years of inventory. That's just not happening.
No, because it's a geopolitical risk.
Exactly. So, I mean, you're talking at least a decade plus. I mean, they're not going. They are a voracious buyer of uranium because they will not allow themselves to be put in that position.
No. It's a little like if you go back like the pre-shale, the US had
Yeah.
massive supplies. Like after the oil shock, they went, holy shit, we could do that again. Like that really was a wake-up call, and suddenly they started building up inventories. Like, and so it's the same methodology. It's just that we're not talking about oil, we're talking about uranium. But I got figured, if you take 6 to 7 years and take that 70 million pounds, that's 400 million pounds. And that doesn't include the existing stuff, the existing reactors. And that's what they're going to have to buy. And like, you know, this came out just a couple of weeks ago, I think it was, and like no one's even paying any attention to it. The equities have hardly moved.
Absolutely. Well, because everything's focused on the Section 232 in the U.S. Section 232 of the U.S. Expansion Act, the Trade Act. So they're waiting on that ruling, which was sent to the White House today from the Department of Commerce. But but look, energy is everything, right? I mean, without energy, nothing happens. Commerce doesn't happen. Manufacturing doesn't happen. It's so critical in everything. To your point, where you're saying from a geopolitical standpoint, I couldn't agree with you more. So how do you play it? How do you play it? How do you express the view?
Well, I guess the uranium was kind of an easy one. Well,
full disclosure, Chris is an investor in my uranium fund, so full disclose that. Yep.
So that's how you play it. But I think it goes beyond uranium. So like if you think about it like this, we've had these open supply lines around the world where countries can, so like Germany is a perfect example. The complete morons over there decided that they were going to reduce their carbon emissions. And so they got rid of all the various, got rid of all the uranium, which they now just buy from the French. So they just pay a premium for the same stuff, while they buy the electricity in. And it's like, these morons going, oh yeah, we're it's like we're reducing our impact on the world because we don't see it. It's a little bit like there's some stupid Australian politician the other day comes out saying, some woman, and she's like, no, we need to have, she wanted to have subsidies so that every Australian family could have an electric vehicle. Now, for starters, that would just collapse the grid. Okay. Like Secondly, 85% of Australian electricity comes from a combination of burning dirty fucking brown coal and natural gas, which is way worse than gasoline. So it's like, okay, just because you can't see it coming out of the back of your bloody car doesn't mean that it's, anyway, back to our German friends. Somebody put something in their beer or in their breakfast because that was the dumbest move ever. And they basically are energy dependent on Russia.
What Chris is talking about, for you, if you don't know, is the Germans have decided to reduce their dependency on nuclear power for a while now, and they still get a big chunk of it from coal, but their renewables, wind and solar, are becoming a much bigger part of the mix, and it's been a disaster for them.
Well, their CO2 emissions have gone up 50%.
Yep.
They've gone up, and the cost of electricity has gone up. Why? Because they're importing all.
Chris, their electricity has risen almost 50% since 2006. Their electricity is 2 times more expensive than France's electricity, and France derives 75% of its power from nuclear power. I mean, it's just staggering when you think about it. And the emissions, right? They're in 2016, the German electricity emissions are 43% higher than what they were. I mean, like, are you kidding me? But yet they wanted to get away from nuclear.
Yep. It's just,
they are the poster child for energy policymakers on what not to do.
Yeah, absolutely. And so when like you can sort of get away with that until the pressure's really on. Like prices go up and they'll just tax people more and so on and so forth. But wait until like a real fucking skirmish breaks out and you realize that you're again, if you go back to that, the US, when they had the oil embargo, that was a big shock and it was like a wake up call. It was like, bloody hell, we need to make sure that we are actually secure in our energy supplies, because if we have to go to war, you can't find a war without energy. And if you can't fuel your army and you can't move them, you're stuffed.
Yep.
And Europe has been fighting, it's like this period of relative calm post World War II is, if you go back over history, it's an anomaly. People don't realize what a massive anomaly it is. And thank God for it, because like neither of us want to live through, you know, a period that is war-torn. But you realize that it's a fragile, super, super fragile situation that people just have gotten complacent about. And so, you know, and then you see all of this political fractioning within the European Union. And, you know, it's like, that's where you have this asymmetric play, because they've let the guard down on many, many fronts, energy in particular. And you see these alliances slowly being built, like the Chinese going into Italy and Greece and so on and so forth.
Yep.
It's not long before they go, oh, you know, the investment we made there, by the way, you're okay if we put a nuclear military submarine in the harbor there.
Absolutely.
Greece, you guys are right with that? Yeah, of course you are. You know, and then it's like, oh shit, okay, we realize now what we actually just bought into. And so military spending is the one thing that I've argued is going to be on the increase in Europe. Partly because the US has said, look, we're stepping back. You guys need to anyway. Like you have to. The hell with it. We're not paying the bill anymore. Not to the extent that we were. So that's kind of forcing them in that respect anyway. But secondly, when they start looking at each other, eyeing each other, going, oh, we're not so happy with our neighbors. And then you look at their history. I mean, twice in the last 100 years, Europe's gone to war, and twice it was Germany. So, and Germany is now calling for a military. And so previously, France was never, you know, France doesn't like that because, you know, France has twice been invaded by Germany. So, you know, people forget these old cultural dividing lines. And again, you come back and go, how do you play that? Well, I think energy is a big, big factor. And, you know, we saw how quickly the tide turned on that relationship between the EU and Turkey and what it looks like now.
Yeah.
It's like night and day. And people think, oh, that couldn't happen to all the other EU member countries. Well, the hell it couldn't, given the right circumstances. So sure. I think energy is, and it's going to be dependent on particular countries. So you kind of look at each country and you go, okay, well, what's their energy makeup look like now? Where do they get it from? Who are their allies? What do their supply routes look like? So on and so forth. Now, in some of these countries, certainly in the EU, they've gotten rid of, you know, things like coal. Okay, so like Germany is a good example. They've now come out and they've said no coal at all. I can't remember the year. I think it's 2025 or something. It's pretty soon. So like coal companies now in Germany are free, almost. Like, I mean, because they're going to go bankrupt. They will.
Yep.
Now, we're not yet investing, but we're watching super, super close. Because if you look at that, imagine for a minute that Germany had a big wake-up call from potential military antagonism towards them. Mm-hmm. You tell me how you're going to react if you're a military general. I'll tell you what you do. You turn your fucking coal power stations back on because you've got to have energy, and you ain't going to put yourself, like if it was a Russian, say, threat, it's like you're going to quickly try and diminish that threat as fast as you bloody well can. You're going to do it with allies. You're going to see if you can strike other arrangements, get some more energy from France, whatever the case might be, but you're going to be changing your energy policy like faster than as quickly as you start putting men on the border. So it's one to watch. And again, that's where you kind of find these asymmetric setups. Again, I'm not saying yet we're watching this and many, many others. I'm just giving that as an example, but that stuff's free right now because they've said it's going away. So every investor out there's gone, oh, these guys are going to zero. I mean, now it's just liquidation value. What and what can you strip off the assets for and sell them off to someone else? Yep. So I find that's pretty fascinating, because as the world's getting more politically contentious, many of these assets are getting cheaper and cheaper.
Well, you mentioned shipping. I mean, I know that you've done some good work on shipping. How are you thinking about expressing it through an investment standpoint?
So shipping's kind of an interesting one. It's not all shipping that we're necessarily interested in, but so dry bulk is still looking weak to me, but like product tankers are pretty interesting. I mean, if you kind of pull out all the geopolitics, it's just a cyclical industry, and it's one which has had like zero capital investment for some time. Most of the big players have either gone bankrupt or they've gone through restructurings of some sorts. The debt holders became equity holders, and it's just been a liquidation in the sector. Even the shipping yards that actually produce these things have been closing up shop. So I like that, because what it means is bringing supply back on is not so easy. You can't just call up the shipyard and say, okay, give me a few cape sizes, I need them ASAP. It's like they don't even, they've closed up shop. They're not there anymore. So that's a good thing. And while it's all taking place, we've had tanker rates. Tanker rates are slowly ticking higher. Yep. Look, we've got maximum pessimism in that sector. We've had 12 plus years of falling prices. Baltic dry, which is kind of one of the measures you can use, that's down sort of 640 somewhere there today. It's in context, it's only been lower 3 or 4 times in the past 35 years that I can get data for. It's back in 1985, then again 2015 and 2016, where it's just kind of bumping and grinding along. And the sentiment in the sector is just toxic. It's absolutely toxic. I mean, I saw something the other day, a large European firm that has for many, many years been sort of a stalwart in terms of the analysis of the sector, has just given up on it. Said, we're not covering the sector anymore.
Right. Well, I mean, could there be a better setup than that?
Yeah. So it's it's kind of got all of the metrics. Unless we stop shipping stuff, like we're gonna need ships, and it's massively capital intensive. Here's the interesting thing, Mike. Like, to go out and build one of these, like the cheap ships are $30 million. The expensive ones are $100 million, right? Yep. So this is never an equity finance type of business. It's always debt financed because it's so damn expensive. And then you look at some of these companies have got no debt, and you go, how the hell does that work? How do you have a fleet of tankers which cost, let's just say for shits and giggles, round figure of $80 million, fleet of these things? How do you have that where they've got no debt? And the answer is that they've gone through so much of a restructuring that the debt's been wiped out. Yep. And you go, well, that's interesting, because anything on a go-forward basis means that they can still take on debt if they wanted to. But at the moment, like, they're not necessarily taking on debt because nobody wants to no one wants to play, not in the debt markets, not in the equity markets, nothing. And they've been bitten for 12 years in a row that they're just, even if you were that CEO of a company and said, you know what, we got to go out and we got to kill this now. We're going to take on some debt. We're going to increase the number of tankers and blah, blah, blah. It's like your shareholders are going to look at you and just fire you. So it's kind of
what are a couple of names? I know Cuppy's had a
we like
Paris Kupperman, Scorpio, right?
Yeah, Scorpio we've been talking about with him. Cuppy's a good mate. So Scorpio, we've got I'll just pull up my list here. The other thing in this space is that there's new regulations coming in for a lot of these shipping companies, and that to me I think is also going to be a bit of a catalyst because there's a bunch of ships out there that aren't compliant.
Yep.
They're at the moment they're basically, you could call them supply, right? And by 2020, they're not going to be supply because they're not compliant. And like for many of them, they're too shitty and old, so they're not actually going to necessarily do anything with them, right? So yeah, I mean, one of I'll give away probably my top one in that space is Star Bulk Carriers. It's also one that's got almost no debt. I know Howard Marks loves it as well, of Oak Tree Capital, and Howard's never met the guy, but he's a legend and a phenomenal deep value long-term investor. And so there's a couple of catalysts there that I think could work in our favor. One is it's called IMO 2020, which is like a new regulation. And the idea behind it, Mike, is to reduce airborne sulfur pollution. And what it means is that they're trying to reduce the sulfur that limits in the fuel from I think the current is like 4% or something, and they want to take it down to like 0.5%. So there's a bunch of ways for companies to actually do this. They can install these what are called scrubbers that'll reduce the sulfur because that's from burning bunker fuel, which is basically bunker fuel is just like your shitty heavy like oil. If you kind of think of the various grades of oil. Yeah, it's like tar. If you've ever seen it, it's really gross stuff. It's one of those kind of liquids that you could imagine in a horror film. Someone would get like dunked into it, and then so this kind of cleans that. What that means is like a lot of these ships have got a lot of downtime to actually have these things installed, and so that's going to mean that there'd be less ships in the water, which just gives you a tighter supply market anyway.
It gives you better price.
Yeah, and then the other option is for these ships to, and this is from what I can gather talking to the industry, is that the more popular one is to switch to a low sulfur marine gas oil that they can use. But the issue here is that with no change in the current pricing conditions for shipping, this puts companies in a situation where they're just going to lose money. So you're kind of sitting there going, okay, well, we could spend all this money on scrubbing, expensive, downtime, and they're not in a position really where they want to be doing this. And no company would be. Or you go down a different fuel route, and that puts us into a situation where we lose money. So and the numbers on using that low sulfur marine gas oil. I was looking at Wood Mackenzie, which are kind of the standouts in the space for analyzing all this kind of stuff. They reckon that it's about a 50% increase on fuel expenses. So there's no easy answer. The other thing that I've talked to some industry experts about is just reducing speed. So because they travel sort of about 12, 13 knots, taking it down to about 10 knots. But that's basically just tighter supply. Because if you took the industry and you said, okay, let's say that they did that, it works out at I think it was around, when I was running the numbers, and don't quote me on this, around about a 20% supply destruction, like overnight, if all the companies did that.
Yep.
So it's like I don't see any answer to that particular problem. And yeah, so we're pretty focused just on companies that can make it through these difficult times. Like I said, many of them have gone away. I mean, it's like it's been a decimation in the sector, so there's not a whole lot left. But then of those that are left, we've obviously been looking at those that have got debt and those that don't have debt. Obviously, in an uptick, those with debt are going to perform better because it's leverage. But we're concerned with just having the ability to make it through this period. So we're watching that space. We're invested in a bunch of names, and then we've got another list that are a bit more leveraged. So we'll kind of watch them because as the supply tightens, it's cyclical, and the capital's at some point going to come back into the space. And if you look at how these shipping, the whole shipping thing's really fascinating. I mean, it's a sector where it goes through periods of time where it just makes like terrible money. It's a horrible business, and then goes through periods where it just prints money.
Yep.
And
human nature being what human nature is, you have peaks and troughs, and people rush in and then they rush out, right?
Yeah. And it's like, this is one I've been watching for years. You go back, I always look for major bankruptcies. So like you look at these major bankruptcies, and I think it was 2004, 2005, that Hanjin went bankrupt. Hanjin was like the largest container shipping company. And they went belly up. There was a whole bunch. I mean, that was just kind of, the standout because it was such a huge company, and it was like, it was like ExxonMobil going belly up. You'd be like, what? Oh, that way? Hey. So that was back 2004. So like, I've been watching this space for a long, long time. And there's other sectors that I've got on my cards now that I've been watching for ages. Gold, one of them. We haven't taken any position in gold and gold mining companies, not yet, not really. But that's another one, which has been fairly hard hit. But yeah, shipping's we're into that, and I think the tide's turned. We can see again, these companies, many of these companies are now profitable, and it's like they're not profitable because the pricing is that powerful. This is profitable because all their debts got wiped out.
Yep.
And so it's much easier to make a profit.
So let's shift gears. Tesla. Give your elevator pitch to somebody who has not been following the Tesla story, and you meet someone for the first time. You're having lunch with them, and they bring up Tesla. I just bought a Tesla, or I'm thinking about buying a Tesla. What's the Tesla story
Well,
as you see it?
back in...
I know how it is as I see it, but let me hear how you see it.
Yeah. Well, there's kind of two views to this company that I've seen. And the bullish view is that the product is amazing, and everybody loves it, and they're doing revolutionary stuff. They have a product that is light years ahead of anybody else. Okay, and that's been the narrative. They're the Amazon or the Apple of electric vehicles. That's been the narrative. Now, I drove a Tesla only once in LA. Trying to think now, it would have been 2012, 13, maybe it was. I can't remember. Somewhere there, Model S. And I was like, that was a cool car to drive. I mean, it was fucking quick as hell. It was a little bit weird because it was like, you know, I don't know if you had them as a kid, those Scale Electric toys. You had a little, and you push your hand on the lever, right, and the car would take off, zoom, and then if you pulled it back, it would stop just as quickly.
Yeah.
You know, so it's like you didn't, because there's no brake on them, right? You'd race your buddies with the thing, and like no one had a brake. You just took your foot off, took your finger off the little joystick, and that was it. Anyway, that's kind of what it felt like to me. So I found it a bit odd, but that's just a matter of, you know, having driven a standard ICE vehicle and then driving those. Anyway, the point was, like, I thought it was a pretty cool car, certainly different, and it was very, very quick. I've driven some bloody quick cars in my life, and that was you know, right up there. So I didn't have any particular, you know, antagonism towards the product or anything like that. And when I started looking at the company, it was, you know, as you know, I was in the venture capital space. So venture capital, the idea is that you bet on potential revolutionary type of, well, certainly within Silicon Valley, revolutionary type of products that can scale quickly and that are pretty disruptive. You know, everybody wants the next Uber, Google, whatever, right? And so there's been a huge appetite for that. And I think a lot of that has fueled Tesla, even though it's 16, 17-year-old company. I think it is now, 17 years. So this is like not a startup. This is not a young startup company, for goodness sake. Yet it managed to attract the same sort of valuation that you were getting from a lot of these tech unicorn, I'll call them, type companies. Most of them based on growth. Like if you look at most of those companies, whether it was WhatsApp or fucking Angry Birds or some of that nonsense, you had user growth that was going through the roof. They hadn't figured out how they're going to monetize it necessarily, but there were enough examples where they figured, okay, if you could get enough of those users on board, you would find ways to monetize them kind of after the fact. Okay, so it's a bit of a hope and see strategy, but it is one that has worked in the past. But then when you have that kind of mentality, people start focusing, and this is true of much in the equity markets now, because you've got growth equities have outperformed value for a long time, and it's that growth doesn't need to necessarily be cash flow positive. So you know, if you think about like WhatsApp or something, it's like, well, it's just about getting, you know, users on the system. They don't really give a shit if it was free and they didn't advertise them and didn't charge them anything. It was like, didn't matter. You just want to grab all those users, and investors were paying for that growth. So that whole mindset really took on a life of its own, not just within Silicon Valley, but within the retail public. And so the problem with the Silicon Valley is that it's been only open to insiders, right? It's accredited investors, and it's those that have got connections and blah, 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 blah. You can invest in some of the funds, but they're all venture capital funds. So again, you got to have a few $1 million behind your name before you can go and touch that stuff. Otherwise, the regulators won't let you, and so on and so forth. So for the average person that's a retail investor, they just saw all of this going on, and they saw these people getting rich and, doing all this amazing stuff. And I think Tesla gave them a chance to participate in that same game, or they felt like they had a chance to participate in the same game. Except that Tesla doesn't meet any of those metrics. There's nothing revolutionary about what they're doing. They have now massive competition from other companies that actually can produce cars at a loss because they have a portfolio of assets that can basically, share that loss so that the entire company doesn't fracture.
Yep.
And so that puts them in a very different position. So there's a whole lot of competition now coming for the company. The other thing was that when you looked at the numbers, they didn't make sense from the start. A lot of the stuff never made sense. Super opaque reporting. Almost every quarter that, and you know this, every quarter that goes by, like they change something in terms of the way that they're reporting something. So it's like really hard to actually figure out what you're dealing with, because you're thinking apples to apples, and then next month it's apples to pears, and then it's apples to fucking carburetors, and you're like, what? I found it really, really hard to actually just keep following up with what their reporting is. And to a certain extent, I've actually just given up, because it's like I've seen so much now that I know it's just nonsense. It's absolute nonsense. So the financials are spaghetti. I mean, I've never seen, it's financial spaghetti. It's just a mess. But that's fine to a retail investor, because they don't know what a balance sheet is probably. So who cares? And that's where they've survived to a certain extent. But
right, when you think about, they have $18 billion in long-term capital commitments, mostly to Panasonic. $4 billion this year. They have $9-10 billion in debt, right? But who cares about that, right? They're going to change the world, right? So you see the balance.
Yeah, you're right. I mean,
that's what a bull would say. I'm saying that tongue in cheek, sarcastically. I mean, it's a financial calamity, right?
I don't. There's nobody that I know, and I've tried hard to find a bull that comes out with the actual financials in terms of saying,
can't. There's not a financially numerate argument you can make that supports it.
The argument is always around something to the extent of any number of these things. Musk's a genius. It's revolutionary, disruptive. Again, it's all that Silicon Valley type of
it's horseshit. I mean, I'd love to send people to Venus, right? If I had the snake oil skills that he did, I could probably go out and raise capital and do that, right? But I mean, there are financial consequences to doing things, and that's the thing that the bulls seem to completely ignore. That you can dream a dream and do whatever you want, and cost be damned, right? And that doesn't make sense to me, because this is a company that is on the brink of financial meltdown.
Well, here's the interesting thing, and I, look, I got caught out on this. I took a short position, and you started off this by saying I don't normally short, and that's true. I never short. I will buy puts.
Yeah.
Occasionally on, and that's quite unusual for me. But if I'm ever going to short, that's how I go about doing it. And I don't mind buying puts in European exchanges, because you got or even calls, because you've got a long time frame. The options market out there are way better than in the US. The US, you normally only got 2 years, which is not really a very long time. People think, 2 years is a long time. It's not. It's really not, especially when you understand option decay. In any event, when I look at a company like Tesla here, I got burnt way back. I took a very small, it was like 1% position. I got wiped out, and I stepped back and thought, okay, cocked that one up. Let me kind of just keep watching this, and I kept watching it. And when I look at what's going on now, you've got every imaginable thing that you would expect of a company that is insolvent and in absolute desperation. Everything. I mean, they've got price cuts, layoffs, closing, then not closing stores, closing service centers, then not closing service centers.
A growth company whose sequential quarter sales were down 31%, right? And their deliveries down 31%. Their profit-making vehicles, the S and the X, down 56%. I mean, that if anything could help subsidize the Model 3. It can't, but in theory, if it could, and those are imploding. What do you make of the behavior of their leader? I mean, he seems to be becoming unhinged. His this is a guy who, settled with the SEC because I'm taking Tesla 420 private, funding secured tweet, which proved to be inaccurate. Settles with the SEC, then they go back to court because the SEC wanted to hold him in contempt. The judge says, go put your reasonableness pants on and go try and figure it out. And here he is supposedly negotiating with the SEC, yet this weekend he's out making bombastic claims, going absolutely bananas, blaming everyone, the Wall Street Journal, all the reporters, blaming the shorts. I mean, look, as a professional short seller my whole career, when they start blaming the shorts, that's a big clue for they're about to implode or something's going on. But there is, he came unhinged this weekend and on Twitter. What do you make of that?
I think you've just got a guy that's at the end of his tether. If you look at the behavior that, okay, let's set the carnival barker aside for a minute, and let's just look at the company. This is a company which has had more executive departures than a fucking war zone.
Yep.
It's like, it's just phenomenal. I know Chanos had a long list that he was building of all the executive departures. And again, I've just given up looking at it. It's just like every day that goes past someone else.
Yeah.
And so it's just not even, and especially those in the finance department, that's been their biggest, loss of executive departures. I don't know any other company that has had even half that amount of staff turnover that has not turned out to have major issues, or has often turned out to be a fraud. So you could take that as any way you like it, but the probabilities are not in favor of Tesla. And then when you look at the leader of this cult, you've got a guy who seems to have an ego that just it governs everything else. When you had the kids in Thailand issue, he had to make this big issue about getting on a plane and going out there and getting his silver dildo to get them out. And it's just, it was absurd. It's like, if you actually gave a shit about something, you wouldn't make a big issue about it and make sure that the papers were there and everybody was there to
he's such a blowhard. He's a megalomaniacal maniac.
It was ridiculous. And then when someone called him out on it, the guy who was there running the operation was like, yeah, that was a bit of a, guy's just being a dick. He goes after him, calling him a pedophile, and anyway. Yeah. So you've got a guy that has a, I think, massive self-worth issues. And it's a governing thing with him. It's very, very important for him to be seen as being, it's very important for him to be socially accepted for whatever reason. And you could sit there and say, well, the guy's a billionaire and he's had, wives that were models and all this kind of nonsense. Fine. but I think there's a psychological issue there. I really do, because the behavior that he exhibits is not dissimilar to the kid in the playground when the back of the class is always vying for attention. So and then on top of that, which is maybe just a personal issue, probably, the use of distractionary things to distract investors around the company has just been phenomenal.
You mean because he overpromises and underdelivers on every single key project he works on? And every time he comes out with these promotions, you just know there's bad news coming. Every time he's out with all this bluster and everything else, there's something lurking behind it where he's trying to create a smoke shield, a smoke screen. But here's the thing: it's so obvious, Chris. Right? I mean, his playbook is so 101 for anyone who's understood financial markets. Now, how it's gone on this long is crazy. How this guy is hailed a genius to me, really? I mean, come on, the electric vehicle. First of all, he didn't start Tesla. The EV has been around. He didn't create anything. I mean, I don't understand the genius here. I fail to see that.
Mike, I think it's a matter of the right time, being the right guy in the right time, in the right place. If we had not had the massive
financial crisis.
If we didn't, and the massive bull market in Silicon Valley,
exactly.
Then none of this, we wouldn't be talking about this today. This thing wouldn't have
and he'll be an afterthought at some point in the future.
Absolutely. So as we stand today, you've got everybody's anticipating and looking forward to the next quarter's results, which will probably be doctored in some shape or form. But at some point, you realize that you've got to pay your bills. So we already know that there's a number of their suppliers are not being paid. We know that they are slashing CapEx, slashing OpEx everywhere they possibly can. They're dumping inventory, in terms of all these new price cuts, they're calling it. But it's basically dumping inventory, even though Musk promised that this was going to miraculously somehow be a vehicle that actually appreciated in value like a fine Bordeaux wine.
Yeah, it's. I tweeted something that said, that's like saying that for those fans of My Cousin Vinny, the movie, saying that he just told the world that he cooks his grits in 5 minutes when it takes the rest of the grit eating world 20 minutes on their stove to do it. Right? He's got a car that's going to appreciate in value. Well, that's called scarcity value. Those are those collector items, not when you're trying to mass produce cars, which you can't do profitably. And you've, by the way, the $35,000 Model 3, which he's been promising for years now, he put that carrot out there at the end of February and already pulled it off. Right? So no matter where you turn, there is something that just doesn't make sense.
I mean, there's been one thing after another, and that's why I say that he's partly a product of the environment that we're in.
Yeah, because he's allowed. Right.
He would have been 30 years ago. He would have been laughed at. Nobody would have taken this guy seriously.
Absolutely right. Well, and in a bearish Silicon Valley environment, he'd be laughed at. Right? He just caught a good break here, a good 10-year run. Look, you left the VC world because you thought valuations were stupid, right? So they've gotten a lot more stupid since then.
Exactly. I mean, it's like I think of, back in 2006, I got out of a lot of housing because I was like, this stuff just doesn't make a whole lot of sense. And partly I couldn't find the yields. And so, but it went on for a little while longer. And then in the VC space, I got out and it's gone on even more. And it just keeps going. That being said, if you look now, the Snap IPO was a good indication. And Lyft, Lyft's just tanked on the open. So that, I think we've reached time. We'll only be able to tell in hindsight, but in terms of that whole narrative, that whole cycle,
Big
Certainly
stupidity.
we're closer than we are to the beginning. And Tesla is partly just a manifestation of the same thing. It's just the most egregious of all of them. And it's combined with what I could, I think will come out as at some time, proof of accounting fraud. But certainly there's been a whole lot of other things going on, like the autonomous driving and, promises that actually exists when clearly it doesn't, resulting in multiple deaths, which I still don't understand how that's actually passed through regulators, but here we sit. It's funny because just on that point, it was about 3 years ago, maybe 4 years ago, I was in a conference, venture capital conference, and we were discussing autonomous driving. And a very well-known, I won't name him because I'm not trying to poke fingers or anything, but it was a very, very well-known venture capitalist who came out and he said, look, we think this is quite a long ways off, because there was noise around saying, oh, within the next couple of years, we're going to have cars that drive you and da-da-da-da-da. And he said, look, I don't think that's the case. And here's why. He says, as soon as someone brings out a car that's autonomous, it just takes that car to have one error and kill someone. And the regulators are going to jump in and it's going to be the end of that and it'll set it back another 5-10 years. So we might get there, but it's probably not the case. Now, that was kind of correct. If you look, Google brought out a car and it had an issue. I think it killed someone, and they pulled it. They pulled the thing off, gone, program down. They went back to the drawing board. Uber had the same thing, right? Back to the drawing board. Tesla's gone and done the same thing and just repeatedly killed people and just kept pressing on. So, and the regulators have not stepped in and gone, hang on a second, these are bloody death traps and they're killing people. We can't have this on the roads. What the hell? That to me, I still don't understand that, because I had agreed with that particular venture capitalist that, if that happens, then the regulators are going to step in and say, this is not okay. You've got to, but that has not happened. Why? I don't know. How? I don't know. But here we stand. That seems to be increasingly getting airtime now. That people are realizing, hang on a second, these things, because you go on to, even on the Tesla bloody fanboy website, you've got strings now in the comment section of people saying, hang on a second, and taking videos where their cars try to drive them into barriers, for example.
Yep.
So I think that look, when I first drove the Tesla ages back, it was a status symbol for many people. It was like a Rolex, Oh, look, hey, I'm a cool guy. I got a Tesla. Yippee! Yeah. Here's my model wife with the plastic tits and my Rolex, and it was like, and I think it doesn't take long for that to change, and people are like, yeah, no, I don't want that, because it's very superficial. Yeah.
All right, man. Listen, we are out of time.
Well, it's been fun, Mike, as always.
How do people get a hold of you if they want to subscribe to Capitalist Exploits?
Let's go to Capitalist Exploits. You can either put .com or .at, and you'll find me there. There'll be a little subscription button if you wish to listen to what we have to say about things. And yeah, there's a couple of products that we've got. One is the Insider Service, which is really just covers much of the research that we do for our funds management. And then the other is a private equity placement service run by my business partner, that gentleman by the name of Jamie Keach, who's a mining engineer who you know relatively well. I think you've had on the show as well.
Jamie is fantastic, extremely bright. He is an absolute must listen in the world of resources. Really, really sharp, and he gets the game, and he points out how people can get run over. Does a really good job.
Yeah, and I brought him into the fold because I felt like we were at that stage of the cycle where I wanted to be placing more of my capital into that space, and I needed to have someone with the technical expertise and experience that he brings, because I'm not smart enough on that front. So he's a welcome addition, and so that's the other service that we do, and that's how I place my capital, and investors can come alongside, basically. So that's it. That's me.
As always, it's great talking, buddy.
Okay.
Well, you take care, and we'll be in touch.
Well, I hope you enjoyed the conversation with Chris. When he and I get in a room or get on a phone call, we can talk. Yeah, I couldn't help it. We had to bring the Tesla conversation in. We didn't do a deep dive on it, just in the interest of time. But yeah, I've talked enough about it. But watching Musk come unglued this past weekend on Twitter, and watching him blame the shorts, blame the press, blame everyone but himself. Look in the mirror. You've completely overpromised and underdelivered on every single thing you've done. Everything. And oh, by the way, people can say you're changing the world. He's changing the world. He's doing whatever. Yeah, that's fine. You went out and took other people's money in the form of equity and debt financing. And with that comes a timeline and obligations to pay back. And that's just the way it works. Sorry. And you don't short anything or on valuation because it's worth what to whom. But when the fundamentals start eroding, which they are, it's worthy of a conversation. I've always been somewhat reluctant to do it, right? Because the Tesla Q community, which is just phenomenal, a group of people who are skeptical and do really, really fine work. And as a guy who's been shorting stocks for 20 plus years, I can tell you, I don't care if they're professional short sellers or not. Some of them are. But the work they do is at a level that is as good as you will find in the short selling community. And it's not FUD, fear, uncertainty, and doubt, as the bulls will have it, which is nonsense. It's facts that they go out and find. But it is. But I was reluctant to do it because a lot of these guys they have names that nobody knows who they are, and so. It's not my lifelong calling to call up BS on Tesla, but I like to make observations, and but I was like, I don't need the fanboy noise, and I don't really share too much of my proprietary work. I don't do it on Twitter. I share that with people who subscribe to my stuff, but you know what? Screw it. Call out what I see, and there we go. And it is what it is, and you just call it like you see it, and that it's unlike anything I've seen, as Chris and I were saying. I've not seen anything like it. More so because it's so public, and I've just not seen public meltdowns like you've seen with this guy. And when you're a short and you see the CEOs blaming everyone, I mean that's like the biggest red flag you could find. So anyway, hope you enjoyed the conversation with Chris. Hope you watch some NHL playoff hockey. That will add a little spice to your life and excitement to it. And we'll see you. Actually, next week, I will not be doing a podcast. I am taking my family on vacation, and we are going to be gone for 8 or 9 days. And I'm not even thinking about doing a podcast. So you'll see me in 2 weeks, or you'll hear me in 2 weeks. Anyway. Hope you have a great couple of weeks and enjoy this week. Thanks.
The information presented on Talking Stocks Over a Beer is the opinion of its hosts and guests. You should not base your investment decisions solely on this broadcast. Remember, it's your money and your responsibility.